Institutional ownership of AMC stock has now topped over 180 million shares. And what you will notice from this picture, it keeps increasing every single month. Now, why is that? Well, let me just tell you guys right now. Institutional investors know the power of AMC stock, and not all of them want to be on the back end of that. They know the power of the retail investor. And as AMC continues to drop, they have the same mindset as what I tell you guys. It becomes less risky to play AMC because there is a fundamental business behind the stock. So at these prices, the risk to reward basis is a lot better to the potential reward side, because your risk is really down to that fundamental valuation, which anyone could argue is in between $10 and $15 at the very least. Now, on top of that, to all of the bears out there, why is Renaissance Technologies a hedge fund or a quant fund basically, that does return over 40% every single year, one of the best performing hedge funds of all time, saying AMC stock is a top 10 buy for them? We're going to dive into all of that here in this video and much more, including talking about what is going to happen next week in the markets as well for AMC. So let's get into it. If you guys find value or just simply entertainment, education out of this video, hit the like button, subscribe to the channel, and let me know your thoughts on this down below in the comment section. If you are a bear, I want to hear from all of the bears. Why is institutional ownership rising, and why is Renaissance Technology vouching for AMC stock in this way? Without any further ado, let's dive into it. All right, guys, just to quickly touch on what I just said, institutional shares that are held long sits at 187,433,000, about 36.27% of the float, which is not bad relative to some other stocks as well. It's not high, it's not super low at the same time. And I think that really is, and why this number has been increasing every single month, especially as the price of the stock has dropped, is because it's not as risky to trade AMC stock right now. And if you're betting on the retail investor coming together, for a short squeeze, for the MOAS, for the fundamental business, whatever it is, it's a lot more attractive buying it at 13, 15, 17, 20, rather than where it was at previously in the 40s and the 50s. Institutional investors, they still bought it in the 40s and the 50s, but not as much as you actually see as of now. And the filings that are coming out, you can see that even people like Cutler Group, right? They have a call position, 774,000 shares worth, a put position, 227,000 shares worth, and shares of about 3,000, right? And they actually decreased their put position by 45% and increased their call position by 44%. Same thing for something like Sequoia International Group. They have a call position of about 15 million shares, put position of about 12.6 million shares, and total shares in general of about 108,000. And why are they doing it like that? Well, they're hedging out their positions, but they're going much more to the long side, right? The call numbers here are a lot more than the put numbers. So we would expect to see that, and that is obviously a great sign going ahead into the future, because I want you guys to really know this, that not all hedge funds are against you guys. There's quite a bit of hedge funds out there that are buying AMC stock that are actually for the retail investor, that also want to make money on the next run up. After all, would you want to be on the short side of AMC, or would you want to be on the long side of AMC when these catalysts start to come? And I think over the last couple of weeks, I think it goes to show exactly how explosive AMC stock can be when you get the right catalyst and market conditions to actually see a rally. And AMC right now is at a very, very interesting level, which we will talk about in just 1 minute. But I do want to talk about Renaissance Technologies just briefly. It says 10 best stocks under $20 according to Jim Simon's Renaissance Technologies. Renaissance Technologies is a hedge fund based out of New York, United States. It was founded by mathematician Jim Simons and known for utilizing quantitative trading strategies. Dr. Simons is one of the oldest hedge fund founders in the world, and he is among the few of his peers with a distinct mathematical background. He received his undergraduate degree from MIT in 1958 and went on to complete a PhD from California's Berkeley in 1961. At the age of 23, after completing his doctorate and doctorate, the now billionaire hedge fund founder would go on to work for the National Security Agency, NSA, which he's responsible for breaking ciphers, which are coded communications used by governments and armies to communicate with each other in a secure manner. So this guy, he knows his shit, let's just put it like that. And I'm sure he knows exactly what is going on, the manipulation behind AMC stock. I'm sure he realizes the mathematical numbers here on what happens when you get a lot of buying pressure on a stock, right? There's a lot you could go into that, could be based off of mathematics. I'm obviously not a whiz like Jim Simons, but it's simple supply and demand, and then on top of that, momentum and velocity as well. I'm sure I would love to talk to them and exactly why they are buying AMC, because it's quite interesting that it's one of his top 10 holdings for a stock under $20, or one of his top 10 holdings in general. So I think it's pretty interesting nonetheless, and there's a lot more you guys could actually read on this, but we're just going to talk about the stocks that he chose and why he likes AMC. So Vector Group is one of them. Microsoft Corporation. Number 9 is AMC. It says AMC Entertainment Holdings owns and operates a chain of theaters across the United States and Europe. It came to the forefront of the financial news early last year when retail investors united on social media platforms and bought the company's shares in bulk, as they managed to drive the share price up and inflict heavy losses on institutional investors that had bet against its shares. AMC Holdings Inc. raked in $1 billion in revenue and negative 0.11 cents in non-GAAP EPS for its fiscal Q4, beating analysts' estimates for both. The company announced in April 2022 that it had acquired 7 theaters in Connecticut, New York, and Maryland in order to expand its presence in the states. Renaissance Technologies held a $127 million stake in AMC Entertainment Holdings Inc. during Q4 2021. This came through owning 4.6 million shares and constituted 0.15% of its investment portfolio. Insider Monkey's survey of 924 hedge funds during the same period revealed that 24 had owned the company's shares. AMC Entertainment's largest investor is D.E. Shaw, who owns 4.9 million shares worth $135 million. So Renaissance Technologies is almost the largest holder of AMC stock, and this is a quant hedge fund that returns on average 40% per year. I think it's pretty incredible, and I think it shows a lot. If I were to theoretically put my money in any hedge fund, it would probably be this one. Returns history. Let's just look at the returns history. It has averaged a 71.8% annual return before fees from 1994 through mid 2014. 71.8%. I think it's pretty clear these guys know what they are doing to be the second largest holder of AMC. Pretty damn impressive in my personal opinion, and I did want to just put that out there that they do still own the stock. They do still buy more shares, and it doesn't look like they're going to be selling out anytime soon. So obviously the mathematics are in our favor with AMC stock, so cheers to the Mountain Dew energy drink with me. Now, nonetheless, let's talk about what is going on this week for AMC stock. So we do have some earnings that are coming up, including some of the large tech companies. You do have Tesla earnings, I believe the 20th, and then you do have a couple other companies as well. The week after that is where you're really going to start to get a lot of the Apples, Googles, Amazons, and we already kind of got a sneak peek to what is kind of going to happen on Amazon earnings. It says Amazon CEO Andy Jassy says costs from pandemic, inflation, and war are too high for a company to absorb. So kind of telling you that, it's not going to be a good earnings season, right, for especially Amazon. And I'm sure Apple, Microsoft, I'm actually pretty bullish on Microsoft, pretty bearish on Apple. That's kind of a topic for another video. But nonetheless, when these earnings come out, and the markets are forced to drop fundamental valuations, forced to cut back on their multiples that they have given these safe stocks like your Apple, Microsoft, Amazon's, Google's. During all of this, they've held up very, very well because they still have high multiples. Why are other stocks like AMC, SoFi, really coming down dramatically? DraftKings, another good one, because the multiples, the price that investors are willing to pay has really come down in those stocks. And that's kind of why the markets are held up, because Apple, these other large stocks that control a majority of the markets. Keep in mind, Apple controls 7% of the S&P 500 itself. They still have those high multiples because investors are willing to pay a higher price for that so-called safety. And we'll see exactly how that does play out. They might finesse some way to turn a negative earnings into a positive, but if they cannot do that, the markets are going to drop. And then when we get a catalyst for AMC stock, it's going to be very hard for shorts to put up enough collateral to remain in their positions, because keep in mind, a margin call does not mean covering on positions. A margin call means you have to deposit more money into your margin portfolio. If you have less money to deposit because a stock, an explosive one like AMC, is going against you, one, these banks, these other hedge funds, whoever has loans to these losing hedge funds, is going to demand extra collateral, because who the hell knows what could happen with AMC stock, right? Who the hell knows? This thing could go to all-time highs, could go to 100, 500, 1,000. These guys know that. So it's going to be very hard for these hedge funds that are short to get enough money to remain in those short positions. I think you could see that next leg up here in the next week or two, especially as those earnings do come out, if AMC does have a catalyst to bring to us. That's going to be the main thing, because if you see the markets coming down, AMC stock will likely come down as well. What you really need to see is the markets coming down. You've already seen the bond markets coming down, but you want to see the stock market going down. You've seen interest rates already going up, so those two things are good. We just really haven't seen the stock market come down enough. When that ultimately happens, that's when even a small catalyst for AMC stock can send the stock skyrocketing. And I think that's kind of what we've seen back here, but it was a little bit of a control manipulation situation that happened here on March 29th. We could talk about that more in a later video. We've already addressed it plenty of times, but I do think the next couple of weeks are going to be pretty good for AMC. We've already seen that huge drop, and it looks like we've been consolidating for quite a bit in here, and we're right under the 50-day moving average. So when we get above the 50-day after this consolidation phase, that's when you're really going to see the stock make moves towards $21 per share. And that's going to be a very exciting time to be a holder in AMC. And I think that's coming here in the next couple of weeks. So I am definitely looking to average down on my position in a substantial way. My average cost, just so you guys are aware, I know people ask all the time, it's about $35 per share. And I haven't added to it in a little bit here, just because I know the stock's going to go back to those prices, and I'm really not panicked. I mean, I know what's going to happen, and even having one share is going to be enough for a lot of people to make quite a bit of money, but I definitely have a decently sized position in AMC nonetheless. So that is pretty much going to be all for this video. The earnings for next week, those are going to be very important. Tesla, I believe Netflix as well. Economic data that does come out will also be important, but I think it's all going to be based around earnings for next week. And you do have some Fed speakers for next week as well. You do have some bond activity, some auctions that are going to be happening, and that's going to be very important. You have the OPEC meeting as well. That does come out on Tuesday. Short-term energy outlook, all that good stuff. So looking pretty damn good. I hope you guys enjoyed this video. If you did, hit the like button, subscribe to the channel, as well as comment down below. Let me know your thoughts on all of this information. Get your free stocks down below in the description with Webull, Moomoo, and Public, as well as if you guys want to come trade with us live in real time, link down below in the pinned comment. Thank you for watching. Enjoy your weekend, and I'll see you in the next one.